Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's time to talk about market fundamentals. Nilesh Shetty from Quantum Advisors is joining us now to discuss just that. Nilesh, good morning. Thank you so much for joining in. Last 2 days have seen some fall as far as the benchmarks are concerned, but mid-caps and small caps continue to trend higher. Do you think that flavor has come back when it comes to broader markets? Because we were talking about record high valuations there. Do you think there are pockets in the broader markets where we can look for opportunities?
There'll always be opportunities available in sort of select pockets, but generally the small and mid-cap space are extremely overvalued, and investors need to be careful. Again, right now there is a lot of liquidity coming into that basket because of flows, especially from domestic mutual funds. But I mean, where valuations stand right now in the mid-30s, and given the kind of economic news coming through, where there is a slowdown happening, which has taken the government by surprise and they've been slow to react. I think investors need to be careful. If there is significant earnings disappointment, you will see a correction in that basket. And given the shallow nature of trading in those stocks, where underlying liquidity seems to disappear very quickly, correction can be very sharp. The larger caps seem to be a lot more comfortable in terms of valuations, and there are large pockets there, including, say, banking, certain stocks linked to the insurance theme, where you are finding opportunity. But even there, generally the market seems to be overvalued and returns need to be moderated. I mean, 3 out of last 4 years have been very great return numbers for markets, which has raised the threshold for what the market expects in terms of earnings, which may not come through next year.
Talking about earnings disappointments, what about IT? That's going to be the first of the block. The sector has done very well, 5%, 6% gain this month, 27% for the full year. Considering the positioning now in IT and, what is the expectation going into Q3? Will it match up with the kind of rally or could it miss, according to you?
Yeah, nothing I've heard from the company suggests there's going to be a dramatic turnaround in the next 1 or 2 quarters. There is expectation that spends will pick up in the US as sort of the government transition is through, and a lot of the companies that were sitting on the sidelines, not willing to spend on IT, will now suddenly start spending. That is the expectation, but on the ground, when we meet companies, including the big four of sort of Indian IT services companies, they are a bit more cautious in terms of their outlook. I don't think next 1-2 quarters is going to be a dramatically different quarter compared to what we saw in the last couple of quarters. What people are looking for is commentary in terms of whether they are getting a lot more optimistic on client spends. But again, the market has moved ahead of actual numbers. And the market is pricing in next 2 years and 3 years of earnings, where they believe there'll be an uptick already in the valuation. So again, we are a bit more cautious there. I think it doesn't offer as much value as it did probably 6 months ago.
Okay. By the way, there were some flashes at the bottom of your screen where sources suggested that gas under GST, that's not an agenda which will be taken up in the upcoming GST Council meet. It's an important one because there were a lot of reports that it could be taken up, and a lot of brokerage notes had also indicated how it would be positive for all these city gas distribution companies because they will be allowed a pass-through and they'll be able to take the credit of input taxes that they pay on some of these sources. So that's why these stocks, they have come at the lows of the day because there was a lot of excitement ahead of those reports. But now sources are suggesting that this is not an agenda in the upcoming meet. GAIL, Gujarat Gas, IGL, Mahanagar Gas, these would be the beneficiaries if it does happen. But for now, this is not something which is happening. Nilesh, your take on the oil and gas space. Is there anything that you like, upstream, downstream, the utilities?
Yeah, we do own certain gas pipeline companies. That's the only play we have there. Again, we picked them up maybe actually 7-8 years ago, where valuations were very attractive. Most of them were trading at a discount to replacement cost. Again, here, because the regulatory sort of intervention has such a big impact on valuations, you really have to be careful. So we'll never have large positions here. So companies sporadically move up and then there is some regulatory event which sort of derates their valuation. But we continue to hold our stocks that we have. We have 2 gas pipelines which are assured a fixed return on capital. And because we got them at a big discount to replacement, we added them to the portfolio.
Okay. All right, Nilesh, thank you so much for joining in today with those thoughts. So that's the fundamental outlook on the markets. Time for a short break now. Rupesh Shah from Symphony will join in next to discuss the growth outlook and more.